because I've been looking over some of your research reports. You're saying, okay, hang on a second here. You expect the best multi-asset returns since 2019 in the year ahead. So unpack it for me. What's got you looking so bullish?
Well, I think it's basically the fact that a large range of assets, I think, will go up by a decent amount. I'm not expecting stellar returns on any one asset, but we're in a situation now where fixed income yields are pretty generous in much of the world, where central banks, I think, will start easing, which will bring those yields down. So you'll get capital returns, you'll get income. And I think as central banks start to ease and hopefully economies start to accelerate in the second half of next year, I think we'll get a more consistent upward path in risk assets also. So taken across the board, positive returns on most assets, which is something that we haven't necessarily seen in any one calendar year for a number of years. So that's where that better return than we've seen for a number of years comes from.
So I was looking over what stands out for you, and it's EMIG, US bank loans and Eurozone equities. What is it about these sectors and asset class that you like the most?
Well, first of all, investment grade as an asset class, I'm preferring to government bonds. I think that with weakening economies over the next quarter or two, maybe more defensive assets perhaps will give a better risk-reward balance. And I'm favoring investment grade. I think the spreads are okay versus government bonds. And within the investment grade universe, I think that the yield spread that we're getting on emerging markets versus developed markets is quite attractive at the moment. So my projected returns on emerging market investment grade are better than on developed markets. Bank loans, whether you're looking in the US or Europe, the current yield is pretty attractive at the moment. You know, you're getting yields in that sort of current yields in the 8 to 10% range, depending on which part of the world you're looking at. And again, even though it's a short duration asset, which doesn't normally do terribly well when interest rates are coming down relative to something like high yield, I think that those yields on bank loans are sufficiently interesting. And US, I think, is a bit more interesting than Europe. Finally, on equities, it was really a toss-up. I think in the short term, we could have volatility because of slowing economies. But then as 2024 progresses, I think risk assets such as equities will do well. And looking at my projected returns and current valuations, it was really a toss-up between Chinese equities, which are pretty cheap, and Eurozone equities. And I suspect that Eurozone equities will get the benefit of having quite a lot of value stocks, which I think will benefit as economies reaccelerate and as central banks take pressure off companies that are borrowing money.